Welcome everyone to this presentation by FFR Trading. My name is John Madison. I'm the senior strategist here at FFR Trading. And it's been a while since we gave you an update on our Turtles Commodities program. This program is our longest running program and has been doing extremely well, as you can imagine, with all that's going on overseas, with the war going on, the supply shortages, inflation. All right, this has been a big boon for the commodity space, and we're seeing that in our Turtles Commodities program over the last several years now. Before we get into the information, you should see the risk disclosure slide here. I think you'll agree, trading is risky business, especially if you don't know what you're doing. And that's why we here at FFR suggest you put your trading in the hands of a proven winner, like the Turtles. We think that's a much better idea than trying to do this on your own. We're also in a highly regulated industry, so everything I say has to be accurate. So during our time here, we're going to review who we are at FFR Trading and what we do. We'll take a look at the Turtles team, and we're going to focus on the Turtles Commodities program. We'll take a look at the academics of the program. We'll take a look at some brokerage statements from our actual clients, and then we'll cover all the educational material that comes with the program as well. First, who is FFR Trading and what is our role here? Well, we're a due diligence firm. Right? That means we've been evaluating traders and their strategies for over 15 years now to find real traders who make real money and provide their services to our clients. So we sift through the thousands of strategies out there to bring you the best of the best. Each trader and each strategy has to go through our 8-step certification process. Some of those steps include a thorough interview process where we get the rules for the strategy. The traders have to have at least 15 years of actual trading experience. We get a back test of the strategy and the trader's actual brokerage statements. And if they can get through all that, the final step is we run the strategy on a live account to make sure that the trades are executed properly and it performs as anticipated. It's a pretty thorough process. I think you would agree. The story of the Turtles, it's a great story and it's certainly worth repeating. There was a trader by the name of Richard Dennis. Back in the late 70s, early 80s, he had developed a trading strategy to trade the commodity markets, but he didn't have enough money. So he borrowed $400 from his family and started trading with the strategy that he had developed. He quickly turned that $400 into over $200 million in just 5 years. Now, Richard Dennis didn't believe he was unique. He felt that he could teach anybody to do what he did. He had a partner at the time that said, "You're crazy. You were born with a gift. Not everybody can do what you do." So he set out a little experiment, and what he did was he invited people off the street to come and learn how to be a trader. And he picked 14 people in that first class, and he called them the Turtle Traders. And they were called the Turtle Traders because when they had made a bet in Singapore that he could take anybody and make them a great trader, they were on this turtle farm. And he said, "I could take one of these little turtles out of this pond and make him a great trader." So when they got back to Chicago, they took an ad out in the Wall Street Journal inviting anybody off the street to come and learn how to be a trader. And they picked, like I said, 14 people for that first class, put them in a room for 2 weeks, taught them his strategy and all his rules. At the end of the 2 weeks, handed them $1 million, and they started trading, and they turned that million into hundreds of millions of dollars, proving that you could be taught how to do this. Well, one of the original students in that class was a gentleman by the name of Russell Sands. You can see Russell is pictured here. Now, Russell went on to become the most successful of all the turtle traders. And here are some of the books that he had written. And he had developed a team over the past 20 plus years now that he had worked with. Jeff Davis, who's pictured here, Dwayne Davis, Steve Charpentier, who is now the head trader at Turtles. Russell unfortunately had passed away a few years ago. But the team continues to trade and carry on that great turtle legacy. All right, let's take a look at some of the academic guidelines for the program. Well, Turtles were well known for their breakout strategy. They are buying and selling a wide range of 50 different commodities from the energies to metals to agriculture and index futures, livestock, currency futures, interest rate futures, right? And they're looking for these markets to break out of a range. If they can catch a market breaking out of a range, it may be beginning to trend, and they can catch that market at the beginning of what could be a very long trend. At the same time, the turtles were also known for mitigating losses. So you've heard the term or the saying, cut your losses short, let your winners run. The turtles really did a great job of putting this into action in their strategy. Now, what Russell and the turtles team have done over the years is they've allocated or created basket sizes for these commodities depending on what size portfolio you're starting with. So you can see here's an example where they recommend you, if you have $15,000 to $25,000 to start with, they're going to put you in 4 markets: bean oil, 5-year notes, natural gas, and sugar. Now, if you go down here, you start getting into the $35,000 to $50,000 range. Right now, they've got 9 markets. So we're talking bean oil, Canadian dollar, crude oil, the euro, the Dow, gold, 5-year notes, lean hogs, natural gas, and sugar. Now, these baskets were created, based on the margin requirements to carry these positions, but also they've given you some diversification each basket as much as possible, so you're not all in just metals or meats or interest rates and futures or index futures, right? You've got a mix of the different commodities in each of these basket sizes. All right, since we've reviewed the academics, let's see how this strategy has done over the last couple of years here. Let's take a look at some actual brokerage statements from our clients. Now, here's an actual brokerage statement from one of our clients. This is Chet and Linda. And you can see this is dated January 31st of 2020. And this clears through Dorman Trading, the broker. Dorman's statement, at the top of the statement, it shows the activity for the month. So you see the debits here. That's your commissions and your losses. And on the credit side, obviously these are your profits. So a $2,100 profit in there in sugar. But again, this is January of 2020. And I just want to scroll down so you can see where they started the year, January. And we'll take a look at where they are now as we go through these statements. So you can see, again, this is Chet and Linda, and this is January 31st of 2020. And you see they started with about $38,000, we'll call it $40,000. They actually lost about $9,400 in closed loss for that month. But they've got trade equity open trades worth $23,000 at the end of the month. So their account value at market is sitting at $52,330. All right, so that was the end of January of 2020. Let's just take a look and see now where were they at about a year into trading. So now you see we are in December of 2020. So they've had 12 months of trading. Now, the broker is executing all the trades for Chet and Linda, so this is completely hands-free for them. But if you look at some of the trades here, check out this trade here in lumber. Right, so you probably heard the stories with the shortages, lumber, the supply shortages. Lumber was just breaking out, and you can see on one contract of lumber, they were up over $20,000 just on that one contract of lumber. But let's see how they've done after 12 months of trading. Remember, they started with about $40,000 in the month of January of 2020. And now their account as of the beginning of the month of December of 2020, sitting at $156,000. Well, they added another $34,000 in profit for the month. And then they've got another $11,606 of open trades that open profit, that trades that have not been closed yet. So the account value at market now at $203,000. So in 1 year, they're up over 400%. And that just blew the stock market out of the water. All right, but we're not done yet. So we've gone through 1 year of trading. Let's check and see how did they do for 2021. Okay, so we're starting the new year, January of 2021. And remember, we left off, they were roughly around 200,000, or sitting at $191,409 at the beginning of January of 2021. They added another almost $9,000 in closed profit, but they've got trades open worth another $20,388. So now they're sitting at $220,752. So let's skip to the end of 2021 and see where they're at. So another 12 months of trading. Now we're in December of 2021. And remember, they started roughly about $220,000 at the beginning of 2021. Now at the end of 2021, their beginning balance was $369,889. They gave back about $12,000 in profit there, but they've got open trades worth $42,536. So now the account value at market is just over $400,000. Now let's skip forward to see where they're at currently. So now, midway through the year in 2022, and they're up another 20%. So in total, remember, they started with $40,000, and the account now is sitting at $476,261. That's $436,000 of profit going back to January of 2020. So we're talking 2.5 years. In total, that's over 1,000% gain in the 2.5 years from where they started. I don't know where else you're going to get these kind of returns. Now, let me introduce you to another client. This is James B., also in the Commodities program, and the broker is executing all these trades for James, and it is completely hands-free. Now, he started in October of 2020. And again, you can see the debits here on the left-hand side. The credits will be on the right-hand side. So let's go through James. Let's see where he started the month of October of 2020. So again, here we are, his statement, October 30th of 2020. Now he started with a little more money, just under $140,000. He actually lost $28,000 his first month. Had some open profit worth about $4,600. But let's move forward a year and see where he is at after a full year of trading. Well, here we are at the end of October of 2021. Remember, he started with $140,000. Well, he started the month of October in 2021 with $393,000. Added another $23,000 in closed profit. And he's got open trades at that point worth $29,124,000. So the account value at market was sitting at $446,000. Remember, he started with $140,000. That's $306,000 of profit in 12 months of trading, hands-free. And that is nearly a 220% profit in 1 year. And again, this is completely hands-free. The broker is executing all the trades on behalf of the client. All right, let's get an update on James as of July of 2022. So here's James' account statement as of July 29th of 2022, so just last month. And you see the account sitting now at $604,000. Gave back about $11,000 in closed loss, but has open trades worth $9,800. So the account now sits at $603,000 as of July of 2022. That's just a year and 9 months of trading. And that is a 330% return on his initial $140,000 in a year and 9 months. Pretty fantastic. So some questions to ask yourself. Could you use help in your own trading? Are you achieving these kind of returns that we're talking about here? This could open up a whole different world financially for yourself. Is this something that might help you achieve your goals? Maybe you have a retirement account that's doing nothing. This might supercharge that retirement account. Do you have the knowledge? Do you have the time to do this for yourself? Maybe you're running your own business. Maybe you are working during the day. Do you have the time to focus and do this on your own? Subscriptions to the Turtles services are limited, right? They can't have everybody taking the exact same trade. At some point it shows up on the big bank's radar and they would trade against it. And their office can only handle so many clients. They're only so big, they can only handle so many clients. And they want to provide excellent service for all their clients. The great thing about this program is it's what we call a learn and earn program. So not only can you have the benefit of the Turtles trade signals sent either to you, your email or text, and you can place these trades in your own account, or like I said, it can be completely hands-free where the broker is executing the trades on your behalf. But also you get all the educational material that comes with the program. So the Turtles will send you a 400-page manual through the U.S. mail and about 7 hours of video with Russell Sands actually teaching you the Turtle strategy. So again, everything that comes with the service, you get the direct alerts to your email, direct access to the Turtle team for any educated questions that you have regarding the markets or the methodology, the education we just talked about, and also access to third-party registered brokers, right? That's an option for those who don't have the time, available to self-trade these signals. And of course, you do get access to us here at FFR Trading. Our job is to help you build a well-rounded portfolio of strategies, right? And that might include different traders, different strategies, different markets. And diversification is certainly key when it comes to trading programs. Now, if I've piqued your interest and you want to get more information or you want to partner with the Turtles, give us a call here at FFR Trading. It's 800-883-0524. It's support at ffrtrading.com. We hope this has been helpful, and we'll look forward to reviewing another program next week.